Good day, everybody. This is Mike Zuzolo with your Tuesday, May 20th grain market update. Given the fact that the U.S. corn producer planted about 63 million acres in 1 week, roughly the size of Texas this past week, it was very impressive to see the December corn contract make new daily highs heading into the last 15 minutes of Tuesday's close. This even though the old crop July futures remained down double digits. Helping the new crop find support was the U.S. dollar, which gave up its strong gains after lunch. I think this probably spurred the wheat and allowed the wheat to try and go after new daily highs, led again by the Minneapolis futures, with Kansas City trying to follow closely. So with the wheat turning on the dollar, I think the corn probably had a very good shot to try and get up towards its levels on Tuesday's close. We also saw the European wheat futures in Paris close higher earlier in Tuesday's session on improving export demand being reported. This has been something noticeably absent in the wheat market recently, and that is the export demand over in Europe and the Northeast. The Mideast and the Northeast Asian countries. Jordan and other Mideast countries were seeking wheat on Tuesday. India also canceled an export tender, reportedly due to international prices being too low. So I think these all work together on the wheat complex. Even with the bearish planting progress numbers and speculation that parts of the northern corn belt will turn to beans after this week, the November beans were still able to hold losses to a minimum Tuesday, once again led by the meal and front-end July beans. That July bean contract hit its best level since mid-February. The July Nove bean spread cleared $2.57 a bushel premium to the July by Tuesday's close, so we're up in very high territory historically. Back in 2004, I want to say we got up into the mid-260s in May of '04 before finding a correction. Reuters reported at midday also Tuesday that China was likely to increase its purchase of imported beans in the month of May to build its reserves even more. Also, the bean strength was very welcome, I think, in the corn pit, and I think that probably built a lot of psychological support in corn, kept the sellers from wanting to try and push through the technicals. And by Tuesday's close, the market held technical support pretty much all the way across the board. Thank you for joining us. This is Mike Zuzolo. Please remember, there is substantial risk of loss in trading futures and options, and the impact of cycles or current events on prices may be already reflected in futures. Have a great day.